Hi everyone, this is Chris with Investors Underground. In today's video, we're going to show you footage from a recent midday study session with Stan and myself. Stan walks through a recent trade that he did live on ATCH. We discussed the setup, how it played out, and we focus a lot on trade management along the way. This video features live commentary, and you can really see how professional traders are thinking about and navigating the stocks that they trade in real time. We hope that you enjoy it, and we hope that you check out Investors Underground. We're a community of professional, active traders all working together to help each other improve and to help other members to become successful at trading. Thank you.
All right, guys, we can get started. ATCH was it has been my only trade so far this morning. I've been, as mentioned on the broadcast, I have been hands off large caps due to the Fed meeting, and particularly due to today's Fed meeting, right? Because we have the expectation of a rate cut, which that is a different narrative than what we've had so far throughout the last several meetings, last several sessions with Jay Powell. So for me, again, my biggest fear comes from the probability of the unknown. It's not the range, it's not the tickers, it's not the volume, it's not the price or the borrow cost or whatever. It's the probability of the unknown that puts me, at unease. And when I'm faced with that decision, when I'm faced with that scenario, I simply choose to be hands off. I would much rather miss the move. I would much rather miss the opportunity versus wish to not have been in it, because at that point I'm at the mercy of whatever the market decides. A couple of things to note here on this ATCH as this price action is developing right now, and I think if you go back, I see some comments from Chris here and Momo. Yeah. So and also he made a really good comment to where you don't really know when things end. And that's true. You don't know when or how things end. But what we're seeing right now is we're getting a little bit top heavy. So if this clear out or this push to fresh highs does not take, then there is a possibility of a fail to follow through setup versus versus this 120 or 125s or whatever. So that is how the supply and demand shifts over time. That was hold on, let me put on these trades. ATCH, as mentioned, that was it was not a main watch, but it was up there, obviously, as I mentioned in our broadcast today, for a liquidity trap setup. And the reason for the liquidity trap setup, Chris has done some fantastic videos on it, so you can go check them out. I've also had some, videos on it as well, more so trade recaps that have to do with the liquidity trap. You can check that as well. But just to summarize it quickly, you have this, essentially you have this some sort of a load day. So here in early August, you can see, or end of July, early August, whatever this was, you can see the cleanup day. So you see some sort of movement in the price action supported by the volume, and then things just kind of go quiet for X amount of time. Every time it's different. Sometimes it's a few weeks, sometimes it's a few months, sometimes it's a few days. So to me, the quiet period, how long it is, it's irrelevant. So to me, what matters is this, the actual technical structure of the move, how it starts. So you have that cleanup day or days, a couple of days here and there with some excitement action, up and down, whatever. And then it kind of goes into this flat period where nothing really happens. And then you have the move actually starts. So, here we had a nice day one with whatever, 250 million. or this 250 is actually this day right here. Let me clean up some of these. This is your 250 million day. And then the following day, you have the gap up and whatever goes to, a buck. I think it went to like a $1.17 pre-market or something like that. We'll look at the higher time frame in a second. But you have the following day that, it gaps up and it kind of goes. It pretty much doubles the volume from 250 almost to 500 million. And then here's the liquidity part, the liquidity trap part, right? It immediately goes down to the following day, it goes down to whatever this is, 44 million. So you have a day of, you have day one of 281 million. Hold on, let me see if you can see them here. So you have day one of 281 million. Then you have day two of 498 million. Let's call it 500 million. So, that's, almost 800 million volume traded. And then day three, it goes down to 44 million. So, that's whatever 5% of the volume that's been traded over the last 2 days before yesterday's volume, essentially. So that is what creates the liquidity trap. And it's a liquidity trap because you have these two massive days of volume. So you have these two massive days of volume, and then the following day, it goes down to 5% of that. So all of that liquidity now is essentially sitting. It's just trapped because the liquidity went in, but it has not come out. And then after that, which brings us to today, we get into the technical structure of the move and kind of what to expect. So here on the higher time frame, you can see the the what was this? 118, 118 highs. You can see that the highs there, 118s. And then yesterday we had a nice, red day, give or take, but overall, you can clearly see how the price has held, or how the price held pretty much your entire structure. Yes, we had some sort of this was actually this morning, this dip, but yesterday we never really broke below 80s or 80 cents. And that 80 cents was put in, the day prior. We tested it yesterday. We kind of hovered around it, but never really broke below it. Today, we had a nice little morning dip a little morning dip there pre-market, and then immediately, essentially, it shot back up. So this here is the creation of the liquidity trap. So what that means is even if you're the best short, let's say you shorted top tick, you top ticked this thing at 118 and 117 and 116. I mean, you were just the perfect short on this thing. The moment it starts to come back up, now that, let's say you shorted theoretically out of this, 700 and whatever, 800 million volume, let's say 100 million of that is shorted. You're now back to the same price levels, and today's volume so far is barely 100 million. So you're slowly creeping up to the previous levels on much less volume. And that's what creates that liquidity trap, because now even if that liquidity wants to get out, it can't, because there just isn't enough volume. If you slam this thing, yes, KJ, that's the deferred demand, right? The shorts. If you slam that thing on the offer, you're going to halt it if you try to get that liquidity out. So that is the concept of a liquidity trap setup, is playing that, anticipating that liquidity that's trapped, having to rush for the covers, and which creates buying pressure, right? Creates that demand. And as KJ mentioned, if you are the best short here, you're simply deferring that demand for later, and later being today, maybe tomorrow, who knows. So that is the little, the little 5-minute, 10-minute overview of a liquidity trap setup and how it plays out, how it's set up. which is this morning on broadcast. This is exactly why I had this as a liquidity trap, just like Chris had as well. I saw there in the comments, because of this technical structure, not solely from the chart, but contextually from the volume as well, right? So all of this volume here is now on the wrong side. So it's got nowhere to go except try to bid up, which creates the buying pressure, which moves the price, and so on and so forth. It starts that domino effect. So now that that's out of the way, we can go into more so the morning structure of the setup. Really nice as far as out of the gate. I wasn't able to I was watching it here into the 90s, 95s, and it was a really good entry point. But for me, the moment by the time I wisened up and decided to actually get in, it had already shot up to a buck, like a buck 02 or so. So then I simply started supporting the dollar bid, plus minus a couple cents. I don't really care. For me, if I'm right, I'm going to be right for the liquidity part of the move. So I don't care if my average is a buck or if it's a buck, 102 or 105, because my risk is easy. My risk is simple. My risk is 90 cents. My risk is, green to red, plus minus whatever. So I'm essentially risking 10 to 15 cents for the potential play of the liquidity trap. Now, I don't know how, what the percentage gainer will be. But for me, this is where I'm able to essentially define the risk reward. And me, risking 10, 15 cents, knowing the liquidity that's trapped, it makes sense. That's not a bad risk, in my mind. So once it started curling up, added a little bit, and then if you guys go back into I don't know where I posted. I've been posting about this in both Lounge and Momentum, but I think maybe this comment was in Lounge in response to RG. I don't know if RG is here. Oh, Chris, you're on. I see you're on here. Feel free to jump in when if you need if you want to add some color as well, man. I know you've been trading this today.
I agree with everything that Stan said, and really just that whole breakdown is the mindset that I've had with it too. And I think maybe some of the unique things about this example as it's playing out are that, like the nuances and the different types of squeezes and the action around that. And so like comparing a very sharp squeeze that happens all at once versus something that takes, a while longer. And you think about it, basically like it, when a squeeze ends, it ends usually because the shorts have, all been blown out and you have a bunch of longs that chase it. And now the supply demand profile shifts to now where it's long heavy and it stops going up. And that's what, can create, the failed follow through and the inventory and everything like that. So that's how a squeeze ends. But there's a couple ways we can get to that same supply demand profile where shorts are blown out and longs are top heavy. So one of them is if it happens all at once, and that's where you get those 30, 40, 50% squeezes, candles stack on top of candles. It's straight up, and everyone who's in it, swing shorts, daily shorts, everything like that, or intraday shorts, they all get stopped out because it went 50% against them or something like that. Everyone's like, okay, hands off, this is blowing out, and longs are chasing that breakout and everything. So that's one way we get there. The other way that we get there is from that ramp and then consolidation and ramp and consolidation. And that's what tends to take all day because it's a process of slowly shorts just get exhausted and longs keep adding and adding and adding, and you end up at that same place. So that's why, like over the last couple of days, especially with some of the recent squeezers, I forget which one we were talking about yesterday, I think TURB. So that was an example of, do you notice how, that action, the supply demand profile changed in the afternoon? So that's that same process playing out in a different way. because you had that giant ramp up and then that big consolidation. And after enough time and enough volume churned, you get to that same area where a lot of shorts are frustrated, they're blown out, and you have a lot of longs that have a higher average now, and then it starts to break that base. So it's all just kind of like anticipating and gauging what is the supply demand profile and knowing when it flips from this favors a bullish bias and this likely resolves higher to now that it is higher and the supply demand profile has changed, now it favors a fade. So like even with ATCH, the more ramps and the more consolidations and ramps it does throughout the day, the more and more vulnerable it gets to be to that eventual fail that keeps failing to follow through. So that's something to keep in mind in like the comments before, if you don't exactly know when it ends, but there's approximations. And so what I'm trying to do all day and what Stan's trying to do and everyone else is, they're based on all of our market experience and the action, everything. We're trying to piece together, where do we roughly think this thing is in its cycle of, it had the squeeze set up there, it triggered the squeeze, and now the squeeze is currently playing out. And so now it's a game of, how do I know when it shifts from, the odds are in my favor to actually I'm over holding this and the supply demand profile is shifting. So, when you don't have perfect answers and when there's, uncertainty, your best bet is usually just to trim along the way, on these ramps that it's squeezing out. If it does 3, 4, 5 of these, if you're taking off, 15, 20% into each of those, by the time it gets to that afternoon and the supply demand profile shifts, maybe you get stopped out on, your last 20% of it, as opposed to getting stopped on 100% or 80% of it. And so, if you look at your P&L at the end of a trade like this, you'll probably be in a roughly similar situation, whether you held it for the entire time and then stopped out on a hard flush, or if you trimmed off, things along the way. So it's really just personal preference and, how people want to go about it. But I think for most people participating in something like this, given the uncertainty and given that other people might not have the same read on it that I have, I think it'd be a prudent thing for people to just trim along the way because, I'm doing my best to get my read on this and I don't have certainty on it. So I think this, taking it as it's working, selling it to strength, and then, going from there makes sense.
Right. Oh, absolutely. Yeah, that's great, great caller there, Chris. Thank you. Thank you for jumping on. Right. So if we look at this higher time frame, you have this 110, right? 110's rejecting, 117, whatever, 115, 105, so this keeps rejecting, keeps rejecting. And the point of this comment is, when you look at the higher time frame, when you see all of these rejects above one, if it was going to break higher, what you want to do is continue to chip away at that resistance, right? So imagine that there was like a block of resistance here, and each time you go to 110, you just chip away at it a little bit more, a little bit more, a little bit more. So in the morning, seeing this chip, right, seeing this continual chipping away, to me, that actually signals a bullish formation, because what happens is once you chip through that block and that resistance is gone and you add the trap liquidity, that makes it more vulnerable when it shoves higher to continue its momentum, or maybe even shove into a halt. I don't think we got close to a halt today, but it's like I said, they don't always look the same. So the point is, if it breaks higher, they'll essentially, if you want to break above that 110, 115, whatever that block was sitting of resistance, you want to tighten the price action right below it. That way, with each pop, you're just chipping away at that block of resistance. You're chipping away until it's finally gone, because then once it's gone, you see what happens, right? Just it swipes up and then onto the next leg it goes. And that was the idea. That was the trade that I was after. I'm sure Chris was after the same thing. The beautiful thing about the market is you could have a slightly different interpretation and still arrive at the same conclusion, right? That's what makes it beautiful, because you have a different interpretation because you have different risk profiles. You have different risk tolerance, right? Every person is kind of their own individual type of entity. So back to this comment. Essentially, the volume, the excitement that's created, once it shoves higher, what I want to see next, I want to see this thing pull back, just as the comment says right here. That's essentially what this comment here is talking about. Create the volume excitement, then need to see a yank lower, right? So I want to see this thing lower. So here we are creating the volume, creating the excitement, and then it yanks lower. So that's what I want to see, because again, as we've discussed many times, you cannot execute liquidity by just buying or selling. You got to have this wave type of emotion, because that's what creates the supply and demand. That's what creates fear. That's what creates panic. That essentially is how you distribute your supply or demand. So seeing this yank here, and then ideally VWAP, which is exactly kind of what we got it to, around VWAP there, plus minus 25%, whatever, then pick up, and you need to see a clear stair stepping, right? Here's a clear stair stepping. Each leg, and then from here it kind of goes parabolic, but you can essentially see the stair stepping price action right over here. Let me zoom in a little bit so we can see it a little bit better. You can even start from this, but you can see the clear steps, right? This is stair stepping type of action, right? So this is a very orderly type of execution from whoever is running this book on the back end, whoever the ultimately the agenda comes from. So that's what I want to see. So as I'm seeing that, then I start to support the next key level, right? I have many reasons to be buying here. I have VWAP, I have, hold on, I'm looking at this because I want to get rid of the rest of my long, and maybe even get short. Again, just as what we discussed, just as what Chris just mentioned, now we have a lot of this volume being distributed at a higher level, and it's no longer going, that much higher. It's no longer increasing. It's no longer behaving in a stair-stepping manner. So there's a possibility of a shift in the supply and demand. Perhaps now there's too much supply. As longs continue to average up and as shorts continue to blow out on these pops, that essentially shifts your supply and demand equation.
Sorry to jump in again. So
Yeah, go ahead.
talking about the intraday cycle here, the reason why I'm still long, even though we're talking about it's much more vulnerable to that flush too, is if you look at the TURB example from yesterday, it's still consolidated, it still had that leg, but it still did a big clear out before it failed. So, in there, it still did that one was a little bit different because it cleared out to that 20 level or something, but that was a move from 15 to 20. That's a big move. And so just like we're seeing now, we could have one final clear out that's, up to 150, 160 or something like that, and then it fails. So that's why, my bias is still long with the heightened awareness that the hard flush that will come will likely be the one that takes it out this time. So that's why, people can put in hard stops, they can tighten up risk, they can sell in pieces, but that's why I'm still long now, expecting that final squeeze out, clear out before the likely fail where I'm no longer interested, long.
And same as well, Chris. I'm still long, but literally, as you can see, I'm putting in the last of the position out there, because what I want to do is I want to see this thing speed up 138, 140, and then just this flash of the liquidity boom, and then that is my exit, and then simultaneously that is my entry for the short side, to once that demand has been cleared out.
And that's when Stan is exchanging to himself.
Yeah.
I think the last interesting thing that we could be witnessing if it times up, pretty soon, is I think we could be getting close to that final trigger around that 140 area. And I think that could trigger, that last clear out or whatever that it's really prudent to exit into if you're long. So, I mean, we might be able to capture this on screen kind of live. And again, is everyone clear about what a trigger point is? A trigger point, the way that I use it, I understand that other people might use it a different way. In the context of squeezes, I'm using a trigger point of where do the people who are offsides start to get out of their position. And so like using that, 115 area for like the multi-day consolidation that we had on this, that was my trigger point because I figured if someone was adding in for the last couple of days short, once it starts to get above that level that they were essentially what I think risking against, that's where they would start to cover. And so that can trigger the squeeze as people exit that. Now, the other day, we had, it was yesterday on TURB, I had a downside trigger level. So what is that? That is after it got top heavy, and I think a lot of longs are adding using one level to risk against. Once it gets below that, that triggers them stopping out. So a trigger level is where someone who I think is about to become offsides, that triggers them into acting by removing their position. And that is what causes those big downside moves. It's no different when Nate uses the term, when something looks like it's going to squeeze, but he's like, I think it's going to flush and circuit down here. It's because he's gauging and anticipating everyone's looking for the squeeze there, and it doesn't. So if it doesn't, where do those people who are anticipating the squeeze stop out? And that is his trigger. And so that is kind of the concept of a trigger point and why it's so useful. And almost every squeeze setup I participate in, which is a huge amount of the activity that I'm doing as in small caps, I always try to identify where, if I were short this, if the majority of people are short this, where would they start to be like, oh shit, like I need to start to get out the level I thought I could risk against, it's breaking that. And so it's natural that that would trigger them to take action by taking out their position. So hopefully that clarifies it. Yeah, we're going to do some more stuff like this. Stan had some great ideas for some trade recaps and things recently. So stay tuned because I think that this kind of content is very valuable for real-time trades and for understanding setups. And I think that if you guys like it, then we're going to do more of it.
Here's a couple comments. You can kind of see, before as we were getting to highs again, right? Look at this clear out, this attempt over here, right? You have the volume. Here we are at highs again, and this volume is, a fraction of what it was before. So that kind of tells me that longs are being a little bit cautious, right? They're not kind of going hand over fist trying to get into the stock. And maybe shorts are blown out, so there isn't really much of a pressure from the offer side. So that's kind of what leads me to believe that if we do get that one final pop, it might be just a clear out of all the backstops of anyone that's stopping versus 40 or 41 or 42, or if there were any longs that missed this move here, and they've been sitting on the sidelines and they're like, what? Well, I'm not gonna buy here. I'm gonna buy a clean breakout, and essentially that's your exchange that happens, right? All the backstops in there go right into the demand of the longs buying the that final breakout because they've missed it. They have itchy fingers, been sitting there all day. And then once that exchange happens, all of the longs are in, all of the shorts are out. Well, you have no more demand. And when there's no demand, there's only one direction you go. And it's not sideways or up. So, that's kind of what again, talking about picking up the little nuances, the little details, that's kind of what it leads me to believe that might be happening here.
Stan, do you have a way to pull up the level 2 on this? I'm not sure if that's something you're able to do. We could stick that in the left-hand side of the screen so people can see what the tape looks like if and when this does trigger in the next, minute or so. Because I think that's a great visual for people. People should be watching it on their own screen as well, if possible. But for the recording, I think that you will see a clear difference in the type of action when something like this triggers versus normalized action. And again, that's what, kind of leads me to have that, heuristic of during squeezes, the volume mirrors the price action. So yeah, check out that, 141-ish level. You can see those, decent size offers. And of course, good size offers, it's always a relative term, but, given the setup, given the market cap, given the environment and everything like that, you just want to see something that's a bit higher than normalized, bids and offers that you're seeing on there. So I'm not saying that this is like, who could be pushing size like this? It's like, this is just, it's an elevated, it's a standout from the level 2 box. So like that's a good sign that I like to see around those key areas, especially if I think it's a trigger area.
Right. Yeah, and then you can, if you pull up the depth, the full book, you can then see the following levels that are not showing on the regular level 2. You can see how you have different offers stacked all the way to 150s essentially, and if you add these up, I mean, this is probably just a quick additions, probably 4 to 6 million shares right here sitting, waiting, ready to be taken. And as Chris said, keep in mind that's just what you see, right? And what you see and what's actually happening, they're not necessarily the truth, because this could be an iceberg order. This could be, someone could be just, hiding size. The point is, the most truthful moment, at least for me in my experience, the most truthful moment is right in the middle of the exchange. So if this thing swipes and goes parabolic, then what you see, not just here, but what you see in the actual tape, right? This is your actual tape. What you see here is the actual truth, like right here. This is the record of truth. Only this. It's not the chart and it's not the level 2. This is your only record of truth. And as you guys know, the chart is nothing more than a visual representation of this box right here. Let me see if I can maybe go like this, and then to have space for the actual tape. There. I'm going to give this maybe another 2 to 3 minutes, and then, or maybe 5 minutes. What is it? Yeah, like maybe 5 minutes, and then I'll close it. Because my wife is waiting to come in here. She's trying to pack. We're leaving for Italy on Friday, so unless you all want to have this conversation, uh, I'm gonna kill this in 3 to 5 minutes. Nice little trigger there, but again, it's only up a penny from the previous. And like I said, we've seen this a bunch of times. So this is what desensitizes people into the price action, especially on the long side.
Yep, now you can see it swiping all those offers. And then this is still normalized. It'll start to, if it goes to plan, it should start to speed up. It should start to panic. The volume should start to increase. And then you're going to see a live look at, potentially people stopping out on the short side, longs chasing in, you get that burst. And then again, after that, is played out, that is one of the most vulnerable to that big fail afterwards. But, you can see some offers at 145. And something Nate talks about a lot is, slow doesn't cause panic. The fast causes panic, and then that, reinforces itself. So you see a very gradual thing here. Someone who's, using that level as a short, they might be a little bit patient, but as it starts to speed up, that's when you're going to see it, potentially, snap and get that clear out. And then after that, that's when it's vulnerable to that fail. This
Right.
is really cool that,
Because
everyone's getting a live look at this.
yeah, and also another little add point there is as it goes just a little bit higher, right? When it's not necessarily speeding up fast, just as Chris just said, it's that speed up that causes panic. And partly because when it goes a little bit higher, we start to justify the loss. We start to normalize the loss. And it's like, oh, well, it's only 2 cents higher. Man, and then it goes like 2, 3 minutes, it's only like another 2 cents higher. Like they give you enough time to normalize that loss and you kind of accept it. And then what happens is little by little by little, and then everyone all at once is like, holy shit, I was supposed to stop at 140 and this is at 162, and then boom, and it goes to 180. That kind of what also contributes to that slow burn, like that slow roast. Yeah, yeah, same, Rob. I've been there as well. And I've used all the excuses under the sun. I've even made up some of my own, whatever it takes to keep me in, right? Like 5 more minutes. Like let me just see what it does. Probably the most dangerous phrase of a trader. Like the moment you start saying that, like you're done. Just might as well close the shop and just, leave the screens.
And here it goes. You see the price, you see the speed up from prior action, see the volume increasing, and you'll see those candles stacking on top of other candles. See that big offer at 150.
Let's see what's the depth. Not much after 150, but it doesn't mean it's not there. And so you can see, just as Chris was saying, you can see the steady trend, but now it's starting to accelerate.
Yep, now it's over one, well, about to be past 150. Those offers getting knocked down.
And then here on the tape, for me also what's important is like I haven't seen any big size. Like this is just all cut up, cut and diced. There's not much size here. So when there isn't much size going through the tape, there isn't much panic happening. Simple as that.
Mhm. Also, something to note is, you see how tight the bid-ask spread is, talking 1 penny. So when we talk about like having tension in the tape where there's supply demand imbalances, you'll see that, those come together very, very tightly on these kinds of names. And now we're getting above those, round levels. And so again, just, put yourself on the other side. If you were short here, if you were, adding in that 140 base or something, and you're like, maybe I'll give it to 150 or so and, let it go a couple of cents past that. It's still, not super fast action. That's kind of where we're at right now. And again, we're coming up on, this is, 55%, almost 60% move from, the entry and the 95s area or so. So this has just been, an exceptionally good, trade thesis, everything about it. It's worth studying. It's worth understanding these. These are valuable things to add to your playbook.
Yeah, see, this is that nasty, just slow frying of shorts right here. Like if you've been shorting this and not behaving, like this is probably one of the worst type of price actions that you could experience. Because they do just enough to not make you cover, but it's not really trending in the intended area. And with each, cent or 2 cents higher, with each minute higher, you're deeper and deeper into the hole until all of those people that are feeling the same way come to the conclusion at the same time, and then boom, it causes that parabolic action.
Yeah, and this is also a time where, if you have been writing this long, if you have been, doing well on this one, you have to take into account that you don't want to get too cute with things. We want to anticipate the action, do everything like that, but at the same time, you can also be raising stops, you can also be trimming, you can also be, what if it doesn't actually squeeze? Because the longer that this goes, the more it churns, and the more it doesn't trigger that big move, the more that there's a possibility that you do have that flush. So just, be objective, have that contingency plan. At what point would you be upset if you let it retrace? If it goes back to 130, 120, and you'd be like, oh, I should have locked in. Well, you have that chance to raise your stops to an appropriate level where, regardless of the outcome, you'll be happy with it. And that's going to be different for each person depending on how they've been managing that position. So that's just a good reminder that we have probable outcomes and we have reality, whereas there's a lot of uncertainty. So just you can control how you manage your trade as opposed to the outcome of the actual trade itself or the outcome of the price action.
Notice and feel how it's getting a little bit thinner. The tape is getting a little bit thinner because it's struggling, to go down, and it's holding, and then just one candle makes up 5 minutes worth of price action. Yeah, I think we're going for the longest midday session ever.
It's an all-day study session.
But so far, you guys have seen what the MO has been, right? It's just a couple pennies, clears it out, comes back, collects a couple more, clears it out, comes back, collects, which that is good because good in terms of for when and if that clear out happens, it will be that much more aggressive and explosive. At least it's been in my experience. And you can tell that even if you can't tell by the tape, you can tell that simply by drawing some trend lines. You can see how this trend line, and then you can see from here, you deviate and you get a little bit more aggressive, and now it deviates even higher, right? And the slope gets even a more acute type of a slope.
Yeah, and reminder to everyone too that we're like during all this and reading our price action, we have incomplete information. With all this, like there could be something like they could have convertible notes that are exercisable above 150 that they're T-whopping or something like that. Like there's other factors that can be at play here, and the only way we can really navigate it is by the price action. But you have to keep an open mind about other things that could be happening and shaping that price action. But we don't have all the information for that. But I mean that's part of trading. It's to make the best decisions that you can with the information that you do have. And structure your trades in a way to compensate for those unknowns, because whether we realize them or not, there are unknowns at play in all of these. So yeah, this looks like it's really starting to trigger. The price action starting to speed up, and you can see, just put yourself on the other side of this and ask, at what point would you be like, that's it, I'm out. This is too much.
I have like almost nothing left in this ATCH. I'm simply waiting to get short right now. Like the size I have left, just like Chris, I don't know how much of his position is locked in, but like 95% of my long position is locked in and I only have a little bit left. And the only reason why I have it left is more so to, uh, again, as I mentioned earlier, it keeps me level-headed and not trigger happy on the short side. But I'm literally waiting to flip short on the right move. And you can clearly see how the tape is speeding up, the volume is accelerating, the range is widening. These are all little signs of the beginning of the end. And when I say the end, I don't mean, this is gonna blow off and then, fail and then boom back to zero. No, it's just you can clearly see that from this level up is a different behavior, right? So that's essentially. So if the higher this goes, obviously when it comes back, it's probably going to find some support here, maybe or something, or something like that. Or at least if I do short the parabolic, this is going to be one of the main areas for covers. And the other important thing to note is I'm not stepping in front of this. Do I have the urge? Absolutely. I'm a human being. Do I experience FOMO? Yes, I do. Do I want to nail the top? Of course. But it's, you got to be smart about it. Like you have to control that inner urge. So this is a nice little change of character here. Like I don't hate this, right? So we have decent volume and you can see you have like a not the highest volume bar, but a 2 million, almost a 2 million volume bar at the highest price. As far as uh, volume per price traded, that is the highest of the day, right? Because 3 million at 95 cents is not the same as 2 million at a buck 80, right? That's how liquidity distributes as well, right? It's not necessarily one for one per share traded, but more so dollar based as well.
Yeah, I posted in chat, but I'm completely done long now, so that's a wrap for me.
I'm still I'm still holding my 1/20th of size.
Yeah. Splitting atoms here at certain points. The Stan has a fractional share left at the end of all this.
Yeah, I got half a share. Uh, but that's the thing, sometimes that's how you end up making more on like tiny size than what you did in the beginning when you sold half of your position on the first pop.
Yeah, yeah. Even if someone, only held a small position, that's like the position increases with size with the price. So that's what we were talking about on Sunday Scam with BE. This great like swing trade long, like it can go up 5% or 10% every day, and people can trim 5 or 10% and maintain the same position side for as long as that train runs.
Like a side comment, there are times where, especially in situations like these, where I have a little bit of size left and my average is so far away from the current price action to where if I sense that the blow off move is coming, I may trade that, right?
Look at that. That's a
Um,
nice fail right there. That this is like a picture perfect, blow off top, fail here. You go back, you try to retest against the highs or so. Supply demand equation has changed. Now it's long heavy. The shorts got blown out. The volume is mirroring the price, and you're using that fail to follow through for a trade like this. So this is just a great one to really walk through.
and I'm no longer long in this. Now we're on the short side. And again, anticipating covers around the 140s area as discussed before. Um, And here, ideally, what I want to see is some sort of a, some sort of a test, maybe like a quick test into the 170s. That would be great. But ideally, if this was all from a perpetual squeeze type of a point, all I have to worry about competing on the covers for is this last leg, right? Which is kind of where you see it trying to hold support. Why? Because this is where all of these shorts averages. It's right here, cumulated average. So they're holding that as, they're essentially covering for break even, like whew, finally. But what I want to see is I want to see a follow through, and then I don't mind continuing to scale. And you can see a pretty almost the highest volume bar of the day, right? I think around the buck 20 was similar, 2.7 million candle, and now again it's about 2.7 million candle or so, but it's much higher. It's almost double price wise what it was before. And this realistically, this is not necessarily done, right? Because all we've pulled back is just back to just this 160. That's not that much given the move that it's had already. So I wouldn't be surprised if there's like a secondary attempt that really cleans up the rest of whoever is left over, Another thing to keep in mind is SSR is on, so your agility as a short is limited. So you got to keep that in mind as well. Um, yeah, that's it so far.
Stan, would you say that the next sort of key area is like 148, where it was basing for that like 20 minutes? That's kind of
Yeah, yeah, yeah.
point.
So if we see like a fast flush into the 140s, I'll definitely cover some. Now the idea is if it fails from here, it's going to have too much of a velocity, so it's probably going to go below 148. But if it slowly trickles lower, then yeah, then 148 is probably going to hold.
Okay, thank you.
And this is like just the first gut check moment of the overall move. That's what I'm saying is that's why I don't necessarily want to convince myself or believe that the move is done, right? Because it was a nice crack, decent volume, but I don't know what's going to happen in the next 10, 15 minutes.
Okay, thank you.
But the more it rejects this, 165s, 170s, and then it fails lower, the better I like it. Because as it hesitates here and it cannot go back higher, right? As it's hesitating in this area and it cannot go higher, then what happens is once this low breaks, then it's going to be another snap. So there's that secondary cleanup. So ideally now we get some sort of a shove higher, cleanup over the 180s or whatever highs was 178, and then failed to follow through, which is why again, don't don't pay attention to the amount of errors there or arrows. They're not all created equal. More so, what is the contextual idea behind the move? Just like if you remember back, I wanted that secondary cleanup. I wanted this type of a secondary move. Now what I need to see for it to fail and then confirm. Because if we fail but then start to firm up, then I'm gonna have to take these off. There's no reason in sitting in there with on the wrong side. But for me, that's what I want to see now. Just like we cleared the 178s, went into the 182s, and now looking for that failure to confirm the original idea. So here again, right now we're right around my average. I'm at what is this? 16559. So again, it's for me, it's more so being with the price action. It's more so getting a feel for it, not necessarily reacting one way or another. Because I'm not just gonna cover 161 for 4 cent profit and be like, great, when this thing shot up to 10 or 15 cents above my average. So the idea still remains the same. Take some along the way, rescale, etc. But what I'm watching for now is I wanna see how this behaves, and there he goes. So there's the little snap. And again, you can see exactly where it snapped to, right? This is no, and here are my covers that I had already sprinkled on the bid, as I mentioned, because again, I can't react to this, much less when I'm talking and trying to do walk through it. That's why you look back and see where are those key levels, right? Where was the support before? I want to be there ahead of time.
Speaking to you.
Dan, this is really, master level type of commentary and walkthrough here. This is just great. I think everyone should really appreciate, how much Stan is putting into something like this. I mean, this has been a full walkthrough of this entire trade.
Both ways.
Yeah.
And now it's probably going to do its little dance here around the same level, right? So if you're starting a position now, you're probably going to end up getting, chopped up. Yeah, this ad here with what I had left over puts me at a third of what this total size is. Here it is, right? Here's the pullback. And again, I'm not going to wait for this to go back to the 120s. Ideally, mid to low 140s does it good for me, and then that's it, because that's another 15-18% move from the average. So that's plenty. If it firms up here, if it goes back to 150s, 152s, then I can just cut it there and we'll call it a day. Because I'm not gonna try to get cute with it for these last 5-6 cents. Like that's not worth it. All right, guys. There it is. Nice little cut. Like I said, I don't think this has legs to go highs again. Something crazy could happen. It could sure shove up and do that, but I don't think it has legs. For me right now, the reward is no longer worth my time. Is kind of what really the decision factor is here. I really wanted this to fail, maybe 140s, 130s. It would have made for a really pretty chart, a really nice trade, but is what it is, right? We take what the market gives us, and that's it. All right, guys. Thank you again. We'll see you in the room or next week.